Assalamu alaikum friends, welcome to today's lecture. Today's lecture is on small and medium entities, SMEs, because there is a separate standard or separate IFRS for SMEs. Okay, it is not a separate standard. It is just more simplified version and more smaller compared to the full IFRS standard. Okay, which we are applying to the small and medium entities. The reason is because small and medium entities applying IFRS is very costly, and most of the aspects are not needed for SMS. So that's why there are some modifications to it, right? Some things which is required in full IFRS might not be there for SMS. Okay, and SMS might be having to they might have to apply lesser IFRS or only some aspect of the full IFRS compared to the full IFRS. Okay, that's why we are studying this IFRS for SMS. So here we are going to discuss the difference between the full IFRS and SMEs, IFRS for SMEs, and also some choices which are not allowed under SMEs, and some omissions and some simplifications. So three things we have to study under IFRS for SMS standards. What is it? Omissions. There are some omissions which are there from the full IFRS for SMS. Next we have choices disallowed. Some choices which are allowed in full IFRS are not allowed for SMS. Then we have simplifications. Definitely, because SMS are smaller businesses, so there will be more simplifications for them. Okay, it is not a new separate standard. It is taken from the full standard, whatever standards you have applied, whether IS 16, IS 38, IFRS 9, whatever it is. Okay, so let us go through the industry perspective. According to the conceptual framework, the cost of the burden of the producer's financial reporting information for shareholders and other shareholders would not outweigh the benefits of making that information available. Definitely, if you are making something, the benefit should be more than the cost of making it. For SMEs, the cost might be too much. That's why they are not applying the full IFRS for them. They have reduced it, the volume of it, the amount, the disclose what they have to disclose. They have reduced it for SMEs. Okay. They have been issued, the IFRS for SMS has been issued for use by entities that have no public accountability. Okay, this means that its debt or equity instruments are not publicly traded. That's what SMS mean. The SMS standards reduce the burden of producing information that is not likely to be of interest of current or potential investors in a small or medium sized entities. Yes. And one thing, you will have not studied this topic in earlier ACCA exams. This is something new. This lecture is not too big, it's small, right? It's short and sweet. Okay, so we'll just go through it. Calculations is not so much here, but just the differences are there. So if you know how to do under full IFRS, whatever calculations you have done, it is same for SMEs also, but in lesser ways. Okay, not so much in detail. Definition. First of all, you should know what is the definition of small and medium sized enterprises. Why? Because in the exam, if they ask whether you can apply SME standard for a company, let's say they are giving some information about the company. So in that case, you need to first define what is SME before you apply the IFRS for SME. Okay. They are usually owner managed by a relatively small number of individuals, such as family group, rather than having an extensive owner base. Okay. So the owner is the one who manages. Usually small number of individuals. It is owner managed. One characteristics of SMS is this. Second, even in financial terms, they're small. Okay, because the revenue or the asset and liability, they are under the control of the entity. They usually have a relatively small number of employees. Employees are small. Okay, whatever they do, revenue, everything is under the control of the owner. Third, they undertake less complex or difficult transactions, which are normally the focus of financial reporting standard. Why do they make financial reporting standard? All this international financial reporting standard or international accounting standards are for what? For you to guide how to deal in complex and difficult transactions. Okay. For example, if you are given a financial instruments, financial assets, how do you recognize it? How do you show it in the financial statement? How do you know all these things? Through the standards given to you, IFRS 9 or IAS 32 or IFRS 7. So likewise, even for revenue, how do you recognize revenue if you don't know? Because if the standard is not there, each company will recognize revenue according to their wish. You know, so because of that, fraud can come. Okay, they will obviously choose a way where it will be more beneficial for them. So all these things will lead to chaos for the organization. That's why a standard is there. Okay, but for SMEs, we know they are small and medium-sized enterprises. They will not deal with financial instruments, derivatives, all those things. They will deal in less complex or difficult transactions. Okay, so these are some features of SMEs. There are just three. Okay, I've told you this chapter is short and sweet. Only three characteristics. Now, what are the problems of differential reporting? Okay, definitely. If there are benefits, there are disadvantages also. I'm having a separate standard just for SMS. Okay, what are the three difficulties? It can be difficult to define a small or medium entity. Yeah, it can be, yes. Because sometimes an organization, let's say an online organization, the organization might be so big, they might have employees, but all those employees are working from home. Okay, they don't have a physical this thing. They are virtually they are working, but they're a big organization. But they might come under the definition of SMS. So it's actually practical is difficult to define SMA. Okay, all this feature can apply. Maybe they might have small number of employees, but the company is big in terms of revenue and all those things. But it's hard. Next, if a company ceases to qualify as a small or medium, then there will be a cost and time burden in order to comply with full IFRS and high standards. Yes. The reason if they do not take full IFRS from before, okay, let's say they have qualified for SMS and they have been using for all these years IFRS for SMS. Later on, they are now becoming a big company, so they no longer qualify as a SME. What happens? Then they have to adopt full IFRS. Then there's a cost. There's a time also because you have to learn the full IFRS. So learning takes time and cost is also there. Okay, when you finally have to comply with full IFRS or IAS standards. That is another disadvantage. Third, there may be comparability problems if one company applies full IFRS and while other companies apply SMS standard. Yeah, it is difficult to compare SMS with other organization because one is applying full IFRS, the other one is taking SMS standard. Now, what is the effect of introducing the SMS standard? Okay, this is just for understanding purpose. I'm building up that knowledge for you because it's a new chapter. I don't want to start with the omissions and all, okay, because these things are not so much important for the exams point of view. From exams point of view is important. What are the omissions, what are the accounting choices disallowed, and what are the simplifications? These three areas are important for you. But let us go through what has been the effect of introducing the SMS standard. Okay, SMS standards will be updated approximately every 3 years. Okay, it's advantage also, it's a disadvantage also. Disadvantages, it is costly, right? You have to update every time, 3 years, 3 years, 3 years. Advantage is that it is updated every 3 years, very frequently is updated, so that means you know that your whatever you have recognized measured using SMS standard is correct, up to date. Okay. In contrast, companies that use full IFRS have to incur the time cost of ensuring compliance with regular updates. The one who see this is like an advantage they are taking in terms of advantage. Okay. Advantage is because full IFRS regularly they have to update. They have to update more than SMA standard. SMA standard is every 3 years. IFRS is not every 3 years. Maybe annually, maybe quarterly, like that. So time is more needed there. Okay, more cost will go for full IFRS. Next, accounting under full IFRS necessity compliance with approximately 3,000 disclosure points. In contrast, SMA is only 300, 10 times more in full IFRS when it comes to disclosure. Okay, all these 300 are in one document, whereas 3,000 disclosure points cannot be there in one document. Maybe there may be so many documents for that. Okay, so what does this do? It reduces the time spent and cost incurred in producing financial statements. Okay, because they have to only make 300 disclosure, so time spent will be less, cost will be less compared to full IFRS. Next, we are going to the very important thing here onwards. You need to do some memorization also. Which standard will go, which standard is omitted, which standard is disallowed, which standard is simplified. All those things you have to memorize a bit. Okay. So key omissions from the SME standard. The subject matter of several reporting standards have been omitted from the SME standard. So this four standards has been omitted. Please learn this four. What is it? I have definitely full videos for three. Okay. Three of the standards I have the full videos except the segment reporting that I will be doing later, and we are uploading it later. So I have uploaded the videos on earnings per share, interim reporting, and assets held for sale. Okay, so this three. Earnings per share, IS 33 excluded. Why? Why do you think it is excluded? Because we have been told that debts and equities are not publicly traded. So if debts and equities are not publicly traded, why do you need earnings per share? How can you calculate earnings per share? Right? So it's not needed. You see, logically, think logically. It will not make sense if you do earnings per share. If your earnings, sorry, if your equities and debts are not publicly traded, what's the use of earnings per share? Next, interim reporting. Interim reporting is for big organizations. They are so huge that they want to make, even in the short term, in the half a year, quarterly, they want to know their results. SMEs, it will not have so much of impact. So interim reporting is omitted, not there. Segmental reporting. See, segments is for big organization, because big organizations you can make segments according to geographic, men, women, classes, high class, low class, middle class, according to income or according to the education level. You see, according to the class, earning class, according to geographic locations, east, west. SMS, they are not located worldwide. So segmental reporting will not be useful for them. Even if they have segments, it will be very less, maybe one or two, which is not so useful that you have to provide a separate section for it. So that is also omitted. Assets held for sale. Assets held for sale, for example, you can sell a subsidiary, you can sell your huge assets. So assets, when you held assets held for sale, this is for big organizations. They will do this. They buy a subsidiary to sell. They buy associate, then they sell. Huge assets they sell. Not like an SME. SME, they do not sell the assets so much. Non-current assets, they do not usually sell. So that is also excluded. Okay, because they believe cost of preparing this is more than the benefit. That's why they have omitted from SME standard. Next, we are going to the accounting choices which are disallowed under the SME standard. This also, make sure you go through the list. That means these choices are allowed under full IFRS, but they are not allowed under SME standards. Okay, now let us get what are they? 1, 2, 3, 3. There are 3. Okay, I think 3 is the number for SME. Everywhere if you see it's 3, 3, 3. Good. It's easy. It's easy for you to remember also. Okay, so there are 3 things. One is goodwill, one is intangible asset, one is uh, investment property. Let me highlight it for you. Goodwill, intangible asset, and the other one is investment property. Okay, these 3 things. There are choices which are disallowed. Okay, what is it? Goodwill. So goodwill is always recognized as the difference between the cost and the business combination and the fair value of net assets acquired, right? In other words, fair value method of NCI is not available. Okay, that means they are telling you difference between cost and the fair value of net asset. That means they have not mentioned the NCI. Usually what happens in full IFRS, when we calculate goodwill, we add the fair value of NCI with the cost of business combination. That means purchase consideration. But here they didn't mention about NCI. So in short, or in other words, NCI is not, fair value of measuring NCI is not available. Fair value for measuring NCI is not available. Okay. In SMEs, IFRS for SME, full standard it is allowed. Now let us go to the intangible asset. Intangible asset must be accounted for at cost less accumulated amortization and impairment. Cost, we take at cost less accumulated amortization and impairment. Amortization, because it is intangible, and impairment also. Because if you have goodwill and on, goodwill is impaired. Goodwill is a part of intangible asset. So for goodwill we have impairment. That's why amortization and impairment we deduct from the cost. But revaluation model is not permitted. What is not permitted is revaluation model. We know that intangible we can revalue it also, but revaluation is not permitted. If you see, one thing is very common. What is it? For both goodwill, fair value of NCI is not allowed. Here also revaluation model is not allowed for intangible assets. So whenever something is revalued or fair value, it's not allowed. If you see, that is not only allowed, right? revaluation model or fair value. Now let us go to the third one. After the initial recognition, investment property is remeasured to fair value at the year end with gain or loss or recording profit and loss. After the initial recognition, okay, you initially recognize it at cost, right? But later, initial recognition, you remeasure it to fair value, okay, at the year end with either gain or loss recorded in profit and loss. Because from cost, if the fair value goes up, gain; if it goes down, loss. Okay, so the cost model can only be used if fair value cannot be measured reliably or without undue cost or effort. Here, you can only use the cost model if fair value cannot be measured reliably or without undue cost or effort. That means there is not so much of cost or effort needed to find the fair value. Then you can use the cost model. Sorry, yeah, I'm sorry, I got a little confused. Cost model can only be used if fair value cannot. Yes, if fair value can be measured reliably, we take fair value. But if it cannot be measured reliably, then we take the cost model. Okay. Next, we go to the key simplifications in the SME standard. Okay, I think this is the last in this. Yes, this are, and then we have advantages and disadvantages of SME standard. Okay, but before that, let us go to the simplifications. Under simplifications, how many points do we have? 1, 2, 3, 4, 5, 6, 7, 8. 8 simplifications we have. Make sure that you go through all the 8 simplifications. Okay. Number 1, borrowing cost. IS 23. Borrowing costs are always expense to profit and loss. Okay. Under full IFRS, what did you do? You can capitalize some of the cost also as a part of an asset. Let's say if you have taken an asset to make a asset or build up an asset or buy an asset, you can capitalize that cost. But here it's always expensed. Next, associates and joint control entities. Okay, IS 28 can be accounted for using equity method in the consolidated financial statements. We know that, right? When it's associate or joint control, what do? We account using equity method in the consolidated financial statements. But sorry, they can also be held at cost if there are no published price quotation or fair value also. Therefore, simpler alternatives to the equity method are available. So if you are not getting the equity method, alternatives are available. For example, fair value or cost. Simpler alternatives. Okay, you can use either cost or fair value, but this is not there in full IFRS. Full IFRS only equity method. There are no options like that. Here you can use either cost, either fair value. Okay. Next, depreciation and amortization. So this is for associates or joint control entities. IS 28. Next, depreciation and amortization estimates are not reviewed annually. Changes to this estimate are only required if there is an indication that pattern of an asset's use has changed. Whereas in full, what do you have to do? Full IFRS, you have to review annually. But here, it's not required. Only if the asset's use has changed, then you do. Next, we have expenditure on research and development is always expense to profit and loss, right? Full IFRS, we can capitalize some of the development expense if it meets 6 criteria. I don't want to go through the 6 criteria now, it's not needed. But here, definitely when we go through intangible assets, IS 38 will definitely go through this. But here, what you know is always expensed. Same like borrowing cost. It does not matter with the research and development, it is fully expensed. If an entity is unable to make a realizable estimate of the useful life of an intangible asset, then the useful life is assumed to be 10 years. So this is related to IS 38, intangible asset. But not with full IFRS, okay? IS 38 is not like that. They usually give you an estimate of useful life. But here, if you cannot estimate, then it is 10 years. Goodwill. So here it's about goodwill. It is amortized over its useful life. If the useful life cannot be reliably established, then management should use the best estimate that Okay, that does not exceed 10 years. That means the maximum is 10 years. It should not exceed 10 years. You cannot say 11 years, 12 years like that. It should be less than 10 years, 9 years, 8 years, 5 years like that. Okay, and it should be amortized. Do we amortize goodwill in our full IFRS? We don't. It's impaired, but we don't amortize goodwill. But here it is amortized over its useful life. Next, on the disposal of an overseas subsidiary, cumulative exchange differences that might have been recognized in OCI are not recycled to profit and loss account. Whenever we sell a subsidiary, what do we do? This is also overseas subsidiary. Okay, we gain or loss, where do we put it? The exchange differences. Okay, exchange gain or exchange loss goes in the OCI. Okay, and we say that it can be recycled back to profit and loss, but under IFRS for SME, it is not recycled to profit and loss account. The exchange gain or loss recorded under OCI. Okay, but under full IFRS, it is. These are numerous simplifications with regards to financial instruments. IFRS 9. What are they? Only two. Measuring more debt instruments at amortized cost. Measuring most debt instruments at amortized cost. Okay, but full IFRS we have an option. Amortized cost, fair value through profit and loss, but here only amortized cost. Next. Recognizing most investments in share at fair value, with changes in fair value recognized in P&L. If fair value cannot be measured reliably, then the shares are held at cost less impairment. If fair value cannot be measured reliably, shares are held at cost less impairment. Okay. But under full IFRS, it's not like that. Okay. Definitely the detail you can check in IFRS 9. And also, no OCI or profit and loss account like how we do for full IFRS. Here it is only shares in fair value with the changes in fair value recognizing profit and loss only. Next, we have the advantages and disadvantages of SMS. Okay, so we will conclude with this, the SME standard. I told you before, only it's very short and sweet. Okay, 3 advantage, 2 disadvantage. Advantages, it is there will be time saving because not full IFRS. Full IFRS takes so much of time. There are so many standards. Also cost saving. Cost is also less because there are simplifications and omissions are there. Even the disclosure you see 3000 versus 300. So cost and time saving is there. Okay. SME standard is worded in an accessible way. Everything can be contained in one document. Third, okay, it is accessible and also it is located within one document. So it's easier and quicker to find the information what you require. Disadvantages is comparability issues are there. It's hard to compare the equity who is following full IFRS standard versus one who is using SME standard. Then we have SME standard is still too complex for many small companies, right? SME is still, even this SME standard for very small companies also it can be too complex. Even though it has been omitted, some things has been omitted, simplified or disallowed, right? For example, leases and deferred tax could be simplified. Okay, they didn't simplify leases and deferred tax, but this could be simplified because small organizations, deferred tax and leases, they usually go for leases. They don't take leases, and neither deferred tax is not so much taken into account, right? This also could be simplified. They have not yet been simplified. Okay, so now this is the chapter summary. Let me zoom this out for you. I think you can see it, right? So 3 things under IFRS for SMS. One is omission, one is choices disallow, one is simplification. Under omissions, 4 things has been omitted. Earnings per share, held for sale, operating segments, and also interim reporting. One thing which is not added here. Choices disallowed, 2 things. NCI at fair value, revaluation of intangibles. Then we have simplifications. Simplifications we have for borrowing costs, R&D, goodwill. We have for other things also which is not there. Everything is not given here. Okay. So that's it for IFRS for SMS. And see you in the next standard.